Welcome back to the Bitcoin Layer. Today we have a very special guest, Peter St Onge. He's a PhD economist with the Heritage Foundation, a fellow at the Mises Institute, and a contributor to Zero Hedge. Peter, how are you doing today?
I am great. Thanks for having me on, Joe.
Absolutely. It's a pleasure to have you. I think our listeners are going to find a tremendous amount of value in what you have to say. We try to bring on experts within their relative fields, and this is the first instance where we've had a genuine bona fide Austrian economist on the show. So I personally am very excited to dig into it. Before we do, though, I'd like to get things kicked off. If you'd like to introduce yourself to the audience, tell them a little bit about what you do, what you have going on.
Sure. My name is Peter St Onge. I'm an economist, PhD from George Mason, which is kind of the mothership of Austrian economics. I was a fellow at Mises Institute for a number of years, also a professor in Taiwan. Currently, I work at the Heritage Foundation and do a lot on crypto and specifically Bitcoin.
All right, fantastic. Well, I'd love to start to dig into it here, specifically Bitcoin. So I'll get things kicked off with my first question, and of course, we'll do some follow-ups from there. Why is Austrian economics so popular among Bitcoiners? I know I found myself gravitated towards it. I hadn't thought of studying econ when I was in college. And then upon finding out about Bitcoin and sort of diving in that rabbit hole and learning a lot more, I actually decided to minor in it. So there seems to be a lot of crossover here. Why is it so popular among Bitcoiners?
There is. I think the shortest answer is that Bitcoiners are smart and they have a lot of respect for liberty. So the sort of longer answer would be that Austrian economics, the word Austrian was applied to it by its enemies. Its enemies were the so-called Frankfurt School, and they were essentially captured, right? They were receiving government salaries. They were subsisting on government research grants, right? They were basically a captured wing of the state, as American universities are today. And so those universities were pushing the government line on pretty much any topic, right? No matter what ails you, the government can make it better. And then the traditional economists said, no, almost every time the government touches something, it makes it worse. And so the Frankfurt School was making fun of those traditional economists by calling them Austrian. Okay, Vienna at the time was kind of a backwater in the German world, and Germany sort of dominated the field of economics at the time. So that's the first thing, is that the name Austrian economics has nothing to do with the country of Austria. It basically simply means that we are the original economics. We are economics if government did not take it over. And so in that, sort of 500-year tradition of standard economics, what we now call Austrian, it was long understood that money is a good like any other good. Okay, there's nothing magical about money. You don't need government to run it. You have a supply and a demand for money. Just like, ice cream cones or Ferraris, these are normal goods. You can assess them and analyze why people are buying them and, why a higher price makes fewer people buy and all these standard things. You can do the exact same thing with money. Okay, money is not magic. Whereas in that, sort of pro-government camp, they like to push this line that money is some special thing. It's like up in the clouds. It's not a normal good, and so therefore it has to be something that governments run.
That's fantastic. That's a tremendous introduction, and I totally agree with that line there. And that the other schools of economics sort of view money as something that has to be manipulated. Within the Keynesian school, there's this sort of concept of quote unquote aggregate demand. I speak with people quite a bit about, why on earth does academia try to apply science to ultimately what has to be tied to reality, which is money. So, you mentioned how universities have been captured, and really, in my time there, they've only been trumpeting, unless you could find otherwise, the Keynesian school of thought. So, in your purview, why did Keynesianism take over, the academics in general?
Yeah, Keynes himself was a nobody. He was not an economist. He was kind of a silver-tongued layabout, kind of a hustler, the kind of guy who might run a Ponzi scheme. In a sense, I guess he did. if we call fiat a Ponzi scheme. Anyway, he was kind of a random guy, and his father was very disappointed in him, so he bought him a professorship, which was what was done back then. In some ways, it still is. His dad bought him a professorship in the hopes that he would settle down and stop, running around all night. And it turns out Keynes is a pretty slick character. He was what they wanted. He was somebody who would put together these, very smooth-sounding justifications for why government should run the money. Moreover, why government should run the money and then inflate it, right? So the essence of so-called Keynesian economics, first of all, there's nothing new in it. It's simply rehashed sort of these garbage theories under inflationism that had been running around for centuries. But the sort of punchline to whatever it is that ails you in an economy within Keynesianism is that either the government has to step in to fix it because, the free market failed, or the government can just pour more money on top of it and everything is going to be better. And both of these, of course, are completely false. They had been debunked by regular economics for many centuries before, going back to the 1400s with the Spanish Scholastic. All of this is government propaganda, but Keynes was he was a useful man. And so he therefore, he got honors rained down upon him. Government funding came wherever Keynes went. He was a money spigot. And so, of course, other academics paid attention. They said, well, I'd like some of that too.
That's fantastic. And I really do. I align with a lot of what you're saying. I like the analogy of money spigot. And it's very interesting to me that in order to get into his position, in order to actually get his career kicked off, it began with somebody else holding the door open for him. And that's just absolutely incredible to me. Well, one thing I want to ask very, very briefly is Austrian economics in and of itself is very skeptical of government competence, government motives. Whereas the Keynesian school, it posits time and time again that, aggregate demand is the end all be all, and aggregate demand in an economy can only be influenced by a central entity. When it comes to the Austrian school, right, it's the exact opposite. And for that reason, for this high level of skepticism, oftentimes a lot of the Austrian school is comprised of anarcho-capitalists. Now, I'd like to ask you about anarcho-capitalism and sort of the intersection of that with your beliefs, and then we could sort of lead into Bitcoin with that.
Yeah, I think so. I would call myself an anarcho-capitalist. I would call myself a reasonable one, which means that I am aware that there are transition costs and there are risks involved. And I'm not necessarily saying that we go immediately to that system tomorrow. There are necessary conditions, but sort of as a moral framework, right? As when you're analyzing a system, you want to start out with what's the ideal. Okay. And you don't want to negotiate with yourself. And if you do that too much, you end up where you're saying, okay, let me look at it as it is and try to make it a tiny bit better. Right. So for me as an intellectual, what I'm much more interested in is asking what's the ideal? Okay, first, and then what compromises might have to be made to get back in order to get from here to there. So this is the kind of method that, for example, Murray Rothbard, the Austrian economist, would take. And in that framework, I think that from a moral perspective, anarcho-capitalism, which, basically defining it, it would follow Locke's second treatise view of life, where you own yourself, right? You are not a slave. You own yourself. Therefore, you have a right to both your body, your mind, and the products of those. Okay, so if you go out and farm a piece of land, then unowned land, and that is now your land. It is your property. Nobody has a right to take it. Why? Because that is an extension of your body. So because you are not a slave, people cannot take your property either. So this is the essence, to me anyway, of Locke's second treatise. And I think that anarcho-capitalism most faithfully, sort of translates that into the real world. So from a moral perspective, taxes are theft or slavery. We can debate. Any sort of government mandate whatsoever that doesn't have a victim. So in other words, victimless crimes are crimes It is the government that is committing a crime when it tells you whether or not you can smoke dope, and so on. And all of these follow morally from the presumption that you are not a slave. If you want to drink Drano, I would highly recommend you do not. However, I do not have the right to forbid you from doing that. I would argue strenuously that you not do that and hope that you don't, right? So we can translate that across a whole lot of activities in the economy. And, when you sort of do up the sums at the bottom, the conclusion is that almost everything government does is both destructive, and is morally bad. So that's sort of where I come from with anarchical capitalism. And I think that the Austrian framework, which sort of at its base, Austrian economics, or really classical economics, it is an incredibly well-developed model, right, where you can essentially explain all of human activity from, at its simplest, from three axioms, right? So action has a purpose, number one. Number two, people differ. Number three, leisure has value. Okay, so if you sit and think about it, those are probably pretty obvious. You can derive all of economics, indeed almost all of psychology, from those very few concepts, right? So that model, right, where you don't have to assume that we have an SEC or an IRS or a Federal Reserve. Okay, you don't need any of these things, right? You sort of start from first principles. You own yourself. You own what you create, okay, from a moral base. And then next, when we're asking, how do you behave? Why do you do things? Why do you take actions? We go through those three axioms. We don't need anything else. We don't need a government. We don't need any other, assistance in living the good life with just that kind of a model.
Gotcha. And I want to pull one of those threads there that you mentioned, in that economics in and of itself really boils down to human psychology. In a way, taking a look at the way that markets behave is a proxy for human behavior. And that's something we believe pretty staunchly here at the Bitcoin Layer. One of the pieces of our very comprehensive global macro framework is that price is truth. At the end of the day, taking a look at what markets are doing, how they're functioning, it's really a proxy for human behavior at the end of the day. So I'd like to ask you, why is that? Why is that the case for you?
Prices are truth in two interesting ways. And, I think that point you're making, that's sort of the essence of why one should morally support free markets, right? So one way that prices are truth are that they communicate information about who wants what and who's willing to give you how much for what, okay? So in other words, is somebody willing to do you a favor in exchange for some favor that you will do them? Okay, so that's information. That tells us what is the sort of most efficient or best thing to do. And then, of course, the other part of prices is that prices stand as a reward, right? So I could earn, minimum wage at McDonald's, but I could earn, more money, going out and fishing for salmon. Okay, so the market price is telling me what I should do to create the most well-being for humanity, right? The best use of my time is to go and work on a salmon boat. But the beauty of it is that it's not just the information; it actually pays me to do it. It encourages me. It nudges me towards actually doing what's most useful for humanity. So prices, they're amazing things, right? Not only do they tell you exactly what all of the other humans most want from you, right? How can you do the most good in the world? Forget, donating seek out the highest paid activity. And that is telling you what is creating the most value for the other humans. And the beauty of it is that the darn thing pays you to do it, right? Unlike charity, which doesn't pay very well. And, one of the big reasons is because it doesn't actually do what it claims to do. Going out and working on a, fishing boat will indeed create a lot more value for humanity, and they're willing to pay you for it. So that sort of accident that pricing both tells you how to do the most good in the world and actually encourages you to do it, I think when you take those together, that is fundamentally why the free market is so beautiful. It tells you how to make the world a better place, and it actually pays you to do it.
Absolutely. That's a fantastic response. And it brings up, once again, the idea that price signals are so pivotal to the economy. And when we take a look at Keynesian economics and essentially what we have today with the Federal Reserve, we have a top-down policy interest rate and the ability to do asset swaps and essentially, quote unquote, create money at whim. And there is a central entity that is in charge of the money, and it creates these distortions around the economy, right? Essentially you have one entity that's controlling perhaps the most complex and disjointed, per se, thing, which is the price of money, right? Interest rates, in addition to what somebody's labor is worth, et cetera. Right. I'd love to hear your thoughts there.
Because money is half of every transaction, so by controlling the money itself, right, you can do several things. One is that you can disturb those price signals. You can aim them in whatever direction your political goals are, whether it's winning elections and so on. But what you can also do by influencing the money is you can do something that taxation can't do, right? You can essentially seize resources from people at will, right? So control of the money, not only does it become very disruptive for the economy, right? It sort of tempts the government into, entering in and sort of screwing things up. But it also sets up this relationship where the government no longer needs us the way that it should, right? So if you had a government that did not control the money, they would largely have to exist on their own taxation, right? So if the government wanted to take resources from us, then they would actually have to tax it, right? What you get in a system once the government is controlling its own money is that it no longer actually has to do that, right? Now what it can do, it can run deficits. Traditionally, the way that deficits worked is that the government had to then go out to markets and, encourage them to buy up the debt. What's specifically been happening over the past 20 years is that the Federal Reserve, in other words, the government itself, has been stepping in and buying up those debts. So in a sense, what we've come into is this sort of disguised in-house money printer where the federal government prints up money in the basement. It gets the Fed to do it, right? And then as a result now, the government no longer needs taxes in order to spend large amounts of money. What's dangerous there is that, in the traditional system where the government exists on taxes, the government is basically a parasite. Okay, we the people create stuff, and then the government comes along and it taxes it. So, we've got a parasite on our back that is sucking out blood. But the thing is, that's at least a symbiotic relationship. Okay, the parasite does not want us to die, right? So any government that is living on taxes does not want to crush the economy, for example. Okay, it has, our prosperity is their prosperity as well. However, once the government can print up its own money, that game completely changes. So we saw this early in COVID, right? If you sort of run a mental experiment. So, when they were considering locking down the entire country, there was a study out of Quebec at the time. I was working up there, and they estimated that GDP fell about 50%, 50. All right. That means that if the government had been living on tax receipts, that means that tax receipts would have fallen roughly 50%. So imagine that you're the bureaucrat who you dreamt up in the shower, this lockdown thing. So you go to your boss and you say, okay, I got a great idea. We're going to lock down the entire country. We're going to do it for 2 years, it turns out. And yes, we're going to have a 50% drop in tax revenue, but that's fine because we can just lay off 80% of the government workers and, we can still get through it. I mean, just imagine that conversation, right? The bureaucrats, the politicians would have said, you are insane. That is impossible. It can't be done. It's science fiction, right? But instead, of course, what happened is they didn't have to have that conversation. They said, look, we're going to lock down. We're going to shut down 50% of the economy. We're going to have, 30% unemployment. No problem. And in fact, the people who lose their jobs, we're going to go ahead and bribe them. Okay, we're going to pay them several $1 trillion to pay them to accept this lockdown. And, we saw it in the opinion polls. People were shockingly accepting of lockdowns because they were paid. Where did all that money come from? Where did it make up the 50% hole in the budget? Where did all that bribery money came from? The Federal Reserve. The central banks printed it up. US, Canada, Britain, all across Europe, all of these countries printed that up. So central banks gave us the lockdowns to go along with the many wars that they have subsidized in the exact same way, and doubtless, ongoing increasing spending. And remember, every time, setting aside the horror of lockdowns and wars, simply when the government increases the amount that it's spending, right? Governments don't create real resources. They don't create anything. All they do is steal. They either steal it with taxes or they steal it with counterfeiting. They do not create things. Go to the DMV, observe the creation in motion. They don't create anything. So everything that they spend, every single dollar they spend that is competing with your hard-earned dollars, they are taking real stuff away from you, right? So fiat, I think sometimes when we Bitcoiners talk about fiat, normal people can think that we almost sound like a cult. They're like, why do you hate the Federal Reserve so much? But if you actually understand what this thing does, right, what it does, not just the manipulation of money, how that screws the economy around, it gives us the boom-bust cycle because you're yanking the interest. Not only the disruption, but when you understand, that it turns government from parasite into predator, it is arguably the most dangerous part of the federal government.
That's great. And I like how you ended it with calling it parasite versus predator. And that's what fiat enables, because really in a world where you only had taxes, you were a government, you could raise money through taxation. Sure, you're a parasite, you could raise money through debt. Okay, debt issuance, that's more voluntary, right? The government in that situation is forced to provide more real economic value than when debt monetization is introduced to the picture, when you have a Federal Reserve, which is essentially another wing of the government by all accounts, who can always buy up that debt, can always fund you regardless of anything. And through that, you remove the free market mechanism that would say, wait a minute, I'm not buying this debt. If you didn't have the Federal Reserve, if you didn't have the ability to create money at whim to purchase this debt, then, upon issuing the debt, the free market would say, hey, look, I'm not buying this. And then you'd have to change course. You'd have to do something worthwhile in order to provide real returns for the debt. Otherwise, you would no longer be a government. You would be transplaced. You would be replaced, right? But as a function of fiat, it enables sort of this loop where even if the public isn't necessarily happy with what the government is doing, you've got this institution with feasibly infinite liquidity that can just continue monetizing your debt.
Exactly. Even if we're starving, they still feast. That is not a healthy relationship.
Not a healthy relationship, to say the least. So just to tie it back to Austrian economics, I have one more question for you here, and then I have some questions that I'd like to dive into about Bitcoin. So, I'd like to follow up on this idea that we spoke about briefly, that Austrian economics is sort of a representation of human sovereignty sort of at its apex, that there cannot be a central entity at the core that influences the price of money and essentially the way that the economic gears turn. So essentially unmanipulated markets, right? The idea that there cannot be top-down rule over these things. They're just too infinitely complex, and at the end of the day, it sort of leads to misery and things of that nature. So with this in mind, and sort of relating it back to Bitcoin, what is the Austrian view of Bitcoin? Why is Bitcoin an asset that those beliefs can be transposed on?
Right. So, I mentioned sort of at the top that Austrians view money as a good just like any other. And so in the case of a car, right, cars do several things for you, right? They move you around. They're comfortable. They protect you if somebody hits you. You can pick up chicks with cars, right? There are a number of things. There are a number of features that cars have. And each of these features encourage some people to buy a car, right? So, every additional feature the car has, you have more demand. You have more people who want to buy a car or that car. In the case of money, where that demand comes from is that you can do two really valuable things with money. Number one, you can transact, right? So you can exchange things with other people. When I go to the 7-Eleven, right? So I go down there and get a sandwich, and I don't actually have anything that 7-Eleven wants, right? Most of what I sell is economics lectures. 7-Eleven, my local 7-Eleven does not want economics lectures, so I'm out of luck. So instead, what I do is I give them these little tokens, and what they do with those tokens is probably pay the electricity bill. Okay, so I am essentially giving them electricity, which 7-Eleven wants, and they are giving me a sandwich, which I want, right? And so, it's really quite a beautiful little mechanism that money serves. It would be very hard for me to go out and get some electricity for them. Right, it would take most of my day, and I wouldn't be hungry anymore. I'd be falling over. So it is a hyper efficient way to exchange things. And then the second thing that money does is it acts as a savings medium, right? So savings is sort of derived from that transactional demand. But savings means, whatever, if I have a good day and, let's say if 7-Eleven has a good day and sells a lot of sandwiches, they have some extra money left over and they don't want to use it all for electricity today. They'd like to store up some tomorrow. And so they can do that with money, right? So, in theory, if you were a fisherman, right, you could just save the fish. You had a good day, you got some extra fish, you could save it. They're probably going to go bad. So instead, you would like to use some token that is going to hold its value, right? And so, this sort of gives us the fundamental function of money. Again, government was not in there. Government was nowhere to be seen in this entire story, right? It has nothing to do with inefficient media of transaction and savings. And then, so at that point, we can then ask, all right, so good. Bitcoin could be a money. It's durable. You can transact it. You can save it. You can move it over time and space. You can be clear about who actually owns it. Okay, so it has all these sort of standard features that you would expect for money. And then the next stage, if you're assessing it as an Austrian economist, would be, well, okay, let me sort of compare this to some existing monies. First you can compare it to fiat. That's not fair. Fiat is so horrible. Fiat's main flaw is that there's an unlimited supply, which is politically governed. But at any rate, so setting aside fiat as an obvious non-contender, you can then move on to things like gold and silver. So in my case, I compared Bitcoin to gold, and I asked, well, are there things that you can do with Bitcoin that can't be done with gold cheaply? And the answer is yes, right? So number one, of course, is transferability over space. So magical email money. It is extremely hard to transfer gold physically you'd have to launch it with a catapult. It's very difficult. Of course, a gold system can be run with checks and credit cards and things. We'll get to that in a second. Number two, what does Bitcoin do better than gold? It has low fees, right? So it can cost millions of dollars to send like $1 billion in fiat. If you want to move $1 billion in gold, the last time that I'm aware of that happening was France in 1971. They wanted their gold back after Nixon was screwing around, and they sent an aircraft carrier to go pick up the gold in New York. So, the cost of hiring an aircraft carrier every time you want to move $1 billion, that's a big deal. So again, physical gold has a major flaw, which comes from the fact that it's physical. Number three, relative anonymity, right? So again, because it is so difficult to move gold, you can't do it quietly, okay? If you want to move a large amount of gold, I guess you could hire Smurfs who, normally buy up methamphetamine ingredients, but it's going to be real expensive to move that anonymously. And then, next up, you've got the absolute fixed supply schedule. Now, gold over, a period of many centuries has had a supply increase of about 2% per year. It's actually kind of astounding that it's been so regular. You would think that maybe at some point gold got easier to mine or hard to mine. But anyway, it's a fairly regular 2% or so per year. In other words, every year there's 2% gold than there was last year. Now, in 2009, when Bitcoin was first coming out, it looked a lot worse than gold, right? You had an annual increase in Bitcoin of, I think it was something like 177%, if we're looking at, say, March of 2009. And so obviously that was not 177% is not as good as gold's 2%. However, of course, the Bitcoin protocol has this built-in system where it comes out slower and slower. So at this point, Bitcoin is actually being created at a slower rate than gold. That at least there we can say it's a tie, and Bitcoin is getting better and better. In another couple of years, Bitcoin will be growing at only 1% a year, whereas gold is at 2%. So Bitcoin is actually going to be better than gold in terms of how much of it exists, how quickly is it mined. And then finally, for me anyway, the big one that sort of sealed the deal was sovereignty resistance, right? So if we go back to the imaginary gold system, if we went back to a gold standard and if it was decentralized, so we're not relying on government gold, rather, banks can have their own gold in their vaults and they can swim in it on the weekends. If we went back to that ideal gold system, because of the physical limitations of gold, right, almost nothing in the economy is bought hand to hand, right, outside of drugs. Almost every, when you go to Amazon, you're using some sort of intermediary, right? Now, in the case of Bitcoin, you don't need an intermediary at all. You can just buy it direct. You don't have a credit union or PayPal or somebody like that. But when you're dealing with gold, because the gold has to be sitting somewhere, right, somewhere with an address, probably guarded by, soldiers and alligators with laser beams. All right, it is somewhere that is very expensive, and it's somewhere that government knows how to get in touch with them, okay? So because of the fact that gold must be centralized, in other words, because of the fatal flaw that gold is physical, that is why it has always and always will be vulnerable to takeover by governments. Because indeed, right, if you're talking to a gold bug, and if Bitcoin didn't exist, I would be a gold bug. I love gold bugs with all my heart. But when you're talking to a gold bug and they say gold is amazing, it does this, that, and you say, okay, good, there's 200 countries in the world. Why are none of them using a gold standard? If it is so amazing, where are they? And the answer, it's not gold's fault. Gold is beautiful because it has a fixed supply. It is a beautiful thing. No, the reason why nobody has gold is because it's vulnerable. You know how to find it. Government has more men with guns than you've got alligators with laser beams on their heads. Government is going to capture it. So this is also why, when it comes to non-Bitcoin crypto, like FTT tokens, I'm generally very skeptical. I wish them well, just like I wish any startup, if they're transparent about the risks, okay? So assuming they're transparent about the risk, which it doesn't appear FTT was, then, just like pets.com has a right to give it a go. Was it a rug pull? Well, it was a failed business, yes. In that sense, I don't necessarily wish all of the shitcoiners bad as long as they're open about the risks. But I have said for years very, very strongly, do not invest real money in that. I think outside of solid, hard money, I have not seen a killer app from the rest of crypto. I've seen some cool stuff. Maybe it has potential. You've got, potential NFTs as a medium for tokenizing titles. Yes, some of these things could be interesting in the sense that Uber or Airbnb are interesting. They could be cool apps. I don't know. As long as you're open about the risks, do your thing. But I mean, for me, what's far more interesting is money, right? Money has such an enormous impact on the world, on the economy, on our relationship with government, on the lockdowns and the wars and the rest of it. So for me, really, in terms of where to park serious money, and, in terms of really sort of having high expectations for the future, for me, it's Bitcoin.
Perfect. Absolutely perfect. So, in essence, gold and Bitcoin in the eyes of the Austrian school, obviously in the eyes of the Austrian school, gold is a far more utilitarian money than something like fiat, which is essentially vaporware. Can be created out of thin air, whereas Bitcoin has all these benefits that you just went ahead and listed, right? The transferability across space, the relative anonymity, and also the sovereign resistance. And I like how you discussed the sovereign resistance and the FTT token, because we're going through an instance right now where there is an increasing risk of government capture on these non-Bitcoin, quote unquote, crypto assets. And I think now more than ever, when things like this are occurring, people are starting to see the distinction that you just made right there, that these other cryptocurrencies, we'll call them, they're issued by a central entity, not unlike Uber, not unlike Airbnb. Therefore, they're represented by as securities, but also, therefore, they can be captured by the state. They can be shut down by the state. So I have a couple more questions for you just to close this up here. This has been tremendous so far. I really appreciate your time. Our viewers are getting a lot of value out of this. And my second to last question would be, obviously, we've talked for a lot of this interview about human liberty, about sovereignty, and how Bitcoin in and of itself is almost a superior embodiment of that to something like gold. In your purview, what would a world of hard money look like?
Yeah, I think it would be an enormously different world. I think if we sort of start, as a starting point that's clear, I'd go to the late 19th century, the Gilded Age, which was really, it's the golden age. Okay, it was socialists who gave it that name. It was a golden age. Almost everything amazing that we have today, the internet, the telephone, magnetism, cars, airplanes, subways, everything Elon Musk does, the telegraph, the computer for that matter, the difference machine, everything was invented in about a 35-year period, right in there, up until 1910 or so, when the progressives won the revolution. Everything was invented in there, and ever since then, we've been living off the fumes, right? And if we had not gone down that wrong path, which, it was largely a political capture at first, and especially in Europe, but, quite clearly in the U.S., I mean, you can look at the founding of the Federal Reserve as it almost marks it on the nose for when we lost the golden age. And, if you sort of imagine what the world would look like if we recapture that, right, if we get government out of money, really, if we move much closer, I think, towards an anarchical capitalist understanding of society, in other words, more respect for individual liberty. Just as an aside, we did have that. This is not fantasy. We did have that. It's called the Lochner era in jurisprudence, where really before FDR packed the court, effectively captured the Supreme Court by threatening to pack it. Before that, we had an era of jurisprudence called the Lochner era. And under that, it was sort of assumed that you had a fundamental right to engage in economic activities, right? And so it's really quite amazing how we lost that. We shouldn't have lost it. But anyway, if we move back to that earlier era, sort of that late 19th century era, and money would be a big part of that, I think we get a much smaller government. The sort of parasite to predator problem, I think, is largely solved. Governments did not behave like that in the 19th century. We get fewer wars. And, in a sense, sometimes it can feel like governments are sort of trying to create crises, or they're trying to take molehills and blow them up into mountains. Whether it's COVID, whether it's climate change. Whatever it is, it seems like, governments are sort of trying to manufacture crises, and that's what you would expect from a predatory government, right? A parasitic government tries to show you how, it takes care of things. If there's an earthquake, look how quickly we fixed it. This is what governments used to do because they were parasitic. So, I think you get fewer crises. People wouldn't be forced to gamble with their life savings, right? This is something that happens today when you have fiat. Is that, you can't retire on a bank account, right? Bank interest has been roughly 0% the past couple of years. You can't. If you want to retire, if you don't want to work until the day you die, you have to go into the stock market, right? You have to play choose your Ponzi. If you like, you got to go gamble. And a lot of people don't want to do that, right? A lot of people, they want to work hard, they want to save up, and they want to have a nice retirement with the grandbabies. You cannot do that. You got to go hustle. You would probably get a big change in the culture, right? Back towards that sort of Victorian era, late 19th century culture. A man's honor, your reputation, right? These were much more important than I think they are today. Sort of opportunism, people engaging in crime, irresponsibility, out of wedlock births. People just not really caring for their legacy, rather than achievement defining a man, a person, instead it's like victimhood, and I mean, this is not healthy. It's not natural, I think, for a society. But I think that those are the kinds of things that you get from this sort of fiat world, right? If interest rates are low enough that people no longer value the future as much, right? They're sort of oriented towards right now. A lot of that has to do with the interest rate. If you're living in a world where you have these sort of boom bust cycles, which is coming from the easy money that the Fed puts out. One example that we can see quite clearly, if you look at what's happened to the stereotype of a banker. Okay, so if you go back to the Victorian era, what did bankers look like? Well, they were sort of older gentlemen, and they had pocket watches, and they had little glasses, and they were very, very conservative and very uncreative. All right, and so now fast forward to like the 1980s, and they got the hookers and blow. It's a very different world. Thank fiat money. Okay, when money is easy, you make it, you get rich quick. You got FTX scams. You got all kinds of scams like that on Wall Street, the CDOs, the bailouts, right? You get this just culture where you are rewarded for being opportunistic, for basically committing legal crimes. Okay, so doing things that are immoral, but you've threaded through the law. This is a very, very unhealthy culture. And I think it ends up trickling down into the rest of the culture where, people in general just, they stop thinking about the future. They stop thinking about the big things. And instead they just focus on, getting high or, whatever it is right in front of you.
Absolutely. And I think that is what I would say the theme of this entire conversation between you and I is that, this central distortion of what money actually is. And money is supposed to be a proxy of actual reality. It's supposed to be a proxy of physical reality and a way of storing human goods and services. It distorts incentives where people are more gluttonous than they otherwise would be. They care much less about the future. This artificially cheap money leads people to chase yields at an individual level, a corporate level, and a sovereign level. Everybody essentially binges out on this cheap debt. The final question I'll leave you with, just to clarify and essentially follow up on the last one, is we talk about the boom and bust cycle and essentially driving interest rates far too low for far too long and then aggressively raising them until there's this awful turmoil that spreads through the economy. Does a return to hard money introduce responsibility back into credit markets and the economy at large? And does that fix the boom and bust cycle?
Oh, yeah, I think without a doubt. It introduces responsibility right at the source. So a lot of the over leverage and irresponsibility that we're seeing in financial markets, a lot of that comes from the fact that the players are betting on a bailout. And they were correct. These are smart people. If they're not smart, they got enough money that they hire smart people. So they knew exactly what they were doing with 2008. You're already seeing bailouts now where, the UK government is stepping in to buy up government bonds. I think we're going to see a lot more of that this cycle and ongoing. And then the second part that it really does is specific on the business cycle itself, right? So there's this misunderstanding, and of course, Keynesian economists push it, that the business cycle, right? In other words, the economy, going up and then going down and recessions in this, they claim that these are natural, or in fact, that these come out of the market, that people go crazy. They call it animal spirits. We all, like a frenzied, Coke party, and we're all just chasing and then you need the wise hand of government to come in and fix it. And this is, shockingly, this is completely false. It is the exact opposite of reality. It is the government that is coming in frenzied and screwing stuff up. And fundamentally, so this is Austrian business cycle theory. This is just classical economic business cycle theory. So what happens is you've got your interest rate bumping along, and your interest rate tells you how much it's going to cost for your business to borrow money, right? So governments like to push that down, and they want to do that because then everybody gets some money, right? You have an economic boom because you have all these new companies, so you have Uber and Airbnb, and Sam Bankman-Fried. All of these characters can get all the money they want because, interest rates are down at 0%. over the past couple of years. Money's cheap. Money's easy. So good. They all borrow the money. They then go out and build up their businesses. They build skyscrapers and put their trading people in there. Or they go hire people, whatever it is. It looks like prosperity, right? Tom Woods has called this the tissue fire stage. Okay, it burns real bright, but it doesn't burn for long. And the reason it doesn't burn for long is that where that money came from was inflation. It was siphoned out of your bank account. Just like a thief who comes every night, and he sticks a siphon into your gas tank and he takes it. He doesn't take too much because you'll figure it out. He just takes a little bit, right? So the Federal Reserve just takes 2% a year. They're not greedy. They're not idiots here because they know that if they take too much, there's going to be pitchforks. They just take 2% a year. All right. When they're siphoning that off, right, in that easy money stage, you get all this huge flood of money coming in. That then causes inflation to rise. At that point, central bank looks at the inflation and they say, we got to taper it down. They're going to notice. They're going to see what we're doing. So they taper that down. And the only way they have to taper that down is to now jack up interest rates. All right. So when you go from today we're in the fours. So when you go from 0%, when you jack that up 4% in a matter of months, well, now what happens is that all these stupid businesses that never should have gotten money, they only got bank loan, like they're losing money, but they only got money because it was so cheap, right? So all of these stupid businesses, which Austrians call malinvestments, all these malinvestments, they're not profitable anymore. Okay, not at 4% money because nobody's going to fund your Uber more money now. Indeed, we're seeing that in Uber, right? Uber's jacking up the prices down because it can't, in this harder money environment, it can't just go on losing $1 billion a year forever. Everybody kind of sobers up. The problem is that if everybody sobers up at once, then yes, you're going to have a recession because you're going to have a whole bunch of businesses that sober up at once. They're going to be laying off people. It's all going to reinforce on itself, right? And the key here is that the market didn't do that. What did that was flooding easy money and then all of a sudden sucking it all right back out. That is what screwed it up. So then you end up with the inflationary, recessionary cycle. And indeed, since the beginning of Federal Reserve, they've done it once every 5 years, which is horrifying. It's just an endless series. Now, before the Fed existed, these did happen. And the way that they happened before the Fed existed was that banks did the exact same thing by suspending specie redemption. In other words, they would lobby the government to allow them to not give you your gold back, okay, from all the paper money that they printed out, right? So paper money back then, it said on it, redeemable for $10 in gold, which was defined as a half ounce of gold. That had been the definition for, 150 years, excepting Lincoln. Anyway, so that was the longstanding definition. And you could just take your little paper money, you go to the bank, you get your half ounce of gold. It was a contract. It was right there. So what banks would do, of course, is convince the government, times are tough. We got to suspend this. There's a shortage of gold in the country. And governments would oblige. And so that's functionally a bailout. So you duplicated the same boom bust cycle. But again, that's not something that comes out of the market, right? If you want to know what the market does to business cycles, the market is that boring guy with the spectacles who, sort of the peak of that was, it's called the Suffolk system in the early 1800s, where, all of the banks were policed by this one bank that was extremely prudent out of Boston. That's the free banking era. That worked amazingly. Why? Because they weren't going to bail you out, right? If you screwed up, then Suffolk or some other bank would immediately come in and they'd say, you know what? I don't believe you're sound. I'm going to go ahead and call you on that. And that bank would fail. And by the way, this is precisely what happened between Binance and FTX. So this is part of the reason why it's kind of fun. We're like watching history happen. What Binance did to FTX is precisely what a free banking system would do, right? If one outfit got too risky, the other ones consume it. They're like piranhas. They're cannibals, right? There is no honor among them in free banking, which is wonderful for the consumer because it means that the bad actors are called out and the people who entrusted them are out of pocket, which is as it should be, right? As opposed to the system that the rest of us are forced to live in, which is where any mistake Wall Street makes is your and my mistake. We're going to have to pay for it. We're going to have to bail them out. Gloriously, even in, fiat crypto like FTX, that's closer to how free banking works. If you're a bad guy, you're gone, unlike Wall Street.
That's fantastic. We are seeing history repeat itself within the wider crypto industry. Thank you so much, Peter. This was a fantastic explanation all around of the Austrian school, the wide sweeping distortions at the government level, and this was sensational. One last thing, where can our audience members find you?
Let's see, I write at Heritage Foundation, heritage.org, also at Mises.org, and I, like pretty much all of us now, am on Twitter, so at Prof. Stange. It'll probably be in the link.
Absolutely. We'll have that link for you in the show notes, and we'll also have it for the entire video directly underneath. So please follow him on Twitter. Please go to those links. Thanks so much for listening, everyone. Keep it here at the Bitcoin Layer. And Peter, we hope to have you back soon.
Thanks so much, Joe.